Today, we are going to break down a super powerful trading framework designed to bring some serious clarity to your trading. It's all about something called top-down analysis, and trust me, it's a system that can really help you make more consistent decisions in the market. All right, so here's what we've got on tap. First, we're going to look at a super common and frustrating trading mistake. Then, we'll get into the solution, this clear framework for seeing the market. And we'll wrap it all up by showing you a step-by-step plan and a real-world example of how it all works.
So let's kick things off with a scenario that, well, probably hits a little too close to home for a lot of traders out there.
Let me ask you this. Have you ever seen what looks like the perfect trade? I mean, it follows all your rules, it checks every single box, and yet, it still ends up being a loser. So frustrating, right? Why on earth does that happen?
Okay, picture this. You're watching the 1-minute chart. Everything is lining up beautifully. You see a clean breakout from a range, it comes back for a picture-perfect retest, and the price action is screaming that buyers are stepping in. It looks like an A-plus setup.
So you take the trade, you're feeling confident, your risk is managed, but then, instead of taking off, the price just completely collapses. It stops you out for a loss, and you're left scratching your head.
So what went wrong? Well, the problem probably wasn't your entry signal. The real issue was context, and the answer is almost always found when you just zoom out.
And this right here, this is the whole problem in a nutshell. While your 1-minute chart was yelling buy, 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 the bigger picture, the higher time frames like the hourly chart, was screaming sell.
And trying to trade against that big dominant trend, it's kind of like trying to swim up a raging river. It's just an exhausting, low-probability fight that, let's be honest, you're probably not going to win.
Okay, so let's get to the solution. It's a really simple, multi-time frame system for top-down analysis that we're going to call the 151 framework.
Now, this framework is built on 3 really simple steps, and each one has its own specific time frame. And when all 3 of them line up, that's where you find those high-probability setups that we're all looking for.
So, first up, you use the 1-hour chart to figure out your overall bias. This is your roadmap for the day. Are we generally bullish, or are the bears in charge? That's the first question you always have to answer. Next, you drop down to the 5-minute chart. And your only goal here is to find a specific, high-value location to trade from. Think of it like a key support or resistance level, a spot where you can join the bigger trend with a really clear advantage. And finally, and listen, this is key, only after your direction and location are confirmed, then you can zoom into the 1-minute chart. Its only job is execution. It's not for analysis. It's simply there to give you that precise, low-risk signal to pull the trigger.
Now let's talk about how we can turn this whole framework into a repeatable day-in, day-out plan that takes all the emotion and guesswork out of your trading.
So a really powerful strategy for finding our location is to use the previous day's high and low. Just think about it for a second. These levels are where buyers or sellers completely gave up the day before. They are massive psychological battlegrounds, and they act like magnets for price, giving us these perfect spots for A-plus setups. So your daily process becomes really mechanical. Number 1, check the 1-hour for direction. Number 2, find your location on the 5-minute relative to a key level. And number 3, you just sit back and patiently wait for that confirmation candle on the 1-minute chart to tell you it's go time. All right. Talk is cheap. Let's see how this all comes together in a real, profitable trade. We're going to use a recent example with Tesla to walk through this whole thing step by step. So in this situation, we're looking at a stock that had been trending down pretty hard, but it's starting to show some early signs of a potential bullish reversal.
First things first, direction. On the 1-hour chart, we see the price finally break above those previous lower highs. This is our first major clue that the downtrend is losing steam and buyers are stepping in. So our directional bias just flipped to bullish.
Okay, next up, location. We drop to the 5-minute chart. And look at this. Price isn't just poking above the previous day's high. It's actually holding it as support. This is huge. It's telling us that what was resistance yesterday is now support today. That's our line in the sand. And finally, execution. With our direction and location locked in, we're now just watching that 1-minute chart for our entry. And here we can use a little trick called the 1-candle rule. We just wait for one single, strong, bullish candle to close. That's it. That's our confirmation. That's our green light to get in. And the result? A beautiful trade that went straight to our profit target, which, by the way, we identified all the way back on our 1-hour chart for a nice profit of over $3,500.
So, the whole point here, the big takeaway is this. We are moving away from the chaotic noise of staring at one chart and stepping into the structured clarity of a top-down approach.
This system makes your trading so much more simple and mechanical. By making sure your direction, your location, and your execution are all working together, you're not just randomly clicking buttons anymore. You're entering every single trade with a clear, well-thought-out plan.
So at the end of the day, this framework isn't just another strategy to add to your collection. It's a whole new lens to see the market through. It's about replacing that emotional guesswork with cool, calm, mechanical clarity. So the real question for you is, how are you going to use this clarity to change the way you trade starting tomorrow?